It is my pleasure to welcome Josip Rupena. He is the founder of a company called Milo. And if you are interested in 100% financing for your real estate, you'll want to check out this interview. And that includes owner-occupied and non-owner-occupied properties, 100% financing if you have a certain thing. So we're going to go into that. Josip, welcome. How are you?
Wonderful. Thank you for having me on the show.
Good. And you're coming to us from Miami today, and you're doing an interesting thing. I mean, there certainly has been talk, and I think I've done some shows and interviewed some people in this space over the years. I just can't remember. But, tokenizing real estate, getting it on the blockchain, getting cryptocurrency financing. Of course, you can get financing against your cryptocurrency. We all know that. But the interplay between cryptocurrency and real estate. So talk to us about that and tell us about what you do.
Yeah, like you mentioned, right, the crypto lending market is pretty large, right? I mean, crypto lending's been around for 8-9 years, and if you think about the size, right, at one point there was about $65 billion in crypto loans outstanding. Right now there's probably about 25 to 30 billion, and globally. And what we realize is that for a lot of those individuals, the reason why they were taking them out is for real estate, and we were in the mortgage lending space. Milo is a company I started 6 years ago, and we were lending to international clients buying real estate in the U.S. And we felt we had a unique perspective and a unique angle building technology in our platform that we could really think about this consumer set. And I had been in the space for a while, and we assumed that someone would have probably built something like this, meaning combining both real estate and more liquid Bitcoin collateral, and no one had. And we felt we could do something about it. And a few years ago, we built the first crypto mortgage offering, and we're able to sort of combine the benefits and nice features of real estate and a stable collateral, as well as the liquidity of Bitcoin, and bring both of them together and be able to help people finally buy homes, because so many of them hadn't bought homes because they refused to sell their Bitcoin. And honestly, that's one of the reasons why their assets have grown so much, because they've been fortunate to hold Bitcoin, right, for 10 years plus.
I'm curious. I know you'll do mortgage lending, or I don't know if we should even call it a mortgage. Is it a credit line? Or, well, it is a mortgage because it's leaned against the property, and it's also leaned against Bitcoin or Ethereum.
Correct.
Do you loan just against the cryptocurrency only with no real estate in the deal?
We do have that product as well. So we will do just crypto loans. That is one of the things that our customers started asking us, because the crypto mortgage, Bitcoin mortgage, it's very specific if you want to buy real estate. But a lot of individuals wanted to do home improvements. They wanted to potentially get down payment financing and get a mortgage with somebody else. And we could solve those pain points for them, given that our product is trust, right? Is making sure that when someone comes to us and they want financing, we give them the dollars that they need, but we make sure that their collateral is protected with our qualified custodians, Coinbase and BitGo. So that's very, very important. So, we expanded that offering. We felt that there was a need for it, and we felt we could do a good job, and we've been offering that now.
So I think that'll be a good lead up to talking about the way you finance real estate. We'll get to that in a moment. But I want to first ask you, just let's peel away the real estate for a moment and talk only about crypto financing. So you'll finance Bitcoin. We also finance Ethereum?
Yes, we do.
Okay.
The majority of our transactions have been mostly Bitcoin, though.
Okay, great. And tell us about your financing those. I mean, how much leverage will you give me against my Bitcoin, and what are the terms of that loan?
Yeah, the crypto loan, it's really a secured loan. If someone wants to be able to borrow $100,000, there's not going to be this extensive underwriting process or credit check or income verification like you would have in a personal loan. It's really based off the fact that you do have Bitcoin. So if you want to borrow,
it's an asset-based loan.
It's asset-based loan. You need, you want 100,000. We're going to need $200,000 worth of Bitcoin, 2 times the amount of the collateral. And we can disperse 100,000 to you within the same day. There's not a lot of underwriting that goes into it.
Yeah, it's really quick and simple. So basically, it's a 50% loan to value ratio on Bitcoin, right?
Correct.
Is it the same on Ethereum?
Yeah, the same.
Okay. So 50%. So, one of the reasons we love real estate is because we can get much higher leverage than that. But tell us, before we move on to the combining real estate with it, tell us about the terms of that loan. So, I've got $200,000 in Ethereum or Bitcoin, for example. I want to get 100,000. You can give it to me quick. That's great. you're going to custody my cryptocurrency with, say, Coinbase or what's the other one? Bitcoin. Okay. So you're going to custody it there. And what will be the terms of my repayment on that?
Yeah. So this is a 1-year loan. It's an interest only, and it balloons at the end. A lot of our clients, what they do is they just roll it, right? They extend the term for another year.
Assuming the lender wants to extend, though.
Correct.
Just a 1-year loan.
Exactly. In our case, right, we're in the business of putting out capital, so we're happy to extend it, and that's subject to the person making payments, right, and everything going according to plan.
Well, and it's also subject to the market. If Bitcoin gets slaughtered, for example, you're not going to extend that loan,
right? Or it'll be a smaller amount, right? It'll be proportional, right, to sort of those levels. But the real benefit is that if you wanted to go and borrow 100,000, 150,000, 200,000, and you walked into a bank, or you walked into an institution, it would probably take you a decent amount of time, right?
Totally understand. Right. So in this example, $200,000 worth of Bitcoin or Ethereum, $100,000 loan. What are the terms? So it's all due in 1 year. Is it interest only until then?
It's interest only. Rates
what rate?
Are call it 12%, somewhere in that range. And you make monthly payments and balloons at the end, right? So
okay, great. So that's pretty equivalent to a hard money loan. That would be the way a hard money loan structure is. It's just on crypto instead.
It is. I think that the unique thing is, if you're doing a hard money loan, right, you're going to have closing costs, you're going to have title fees, you're going to have recording fees, right? You're going to have all these other elements. And this, you're not going to have any of that.
There's no fees at all.
There's no fee. I mean, there's an origination fee that we charge, right? That's 1 to 2%, but it really is one of those additional tools that we've seen some of our real estate investors use this to be able to buy land or buy other things that are harder to finance, right?
Okay, so it's basically 12% plus 1 or 2 points.
Correct.
Is what you're saying. Okay, great. Right. And what happens though? Say that Bitcoin, that $200,000 worth of Bitcoin or Ethereum, say it goes to 50,000, so it's underwater, this loan, right? And now the lender is starting to get anxious because the deal's underwater. Can you call that loan?
Yeah. There's going to be a level where the client would need to post more collateral or reduce the loan balance.
So it's a margin call, basically.
Correct. So that's the trade-off, right? Because there's no other collateral or other sort of recourse, right, to pay down the loan. That you're really looking to the Bitcoin collateral, right, to be able to mitigate some of these events.
Yeah. Okay. And is that personally guaranteed, or is it just the collateral?
Nope, it's just collateral. Yeah. There's no
personal guarantee, but a margin call. And if you don't make the margin call, you take the collateral, but
you pay down. You pay down the loan, and then you return the remaining collateral back to the borrower.
Okay, but let's just take this example before we get to the real estate. Right, the collateral was worth 200,000. It went to 50. And say that's 3 months.
So the margin call would be if the collateral is worth 133,000, right? So there would be the loan amount was 100, right? So it's going to go down by a level that still is in excess of the loan balance, and then the remainder from that to the loan balance will be returned to the client.
So in other words, you've got about a 35, give or take, % margin. The margin call happens when you're not even underwater yet.
Correct.
Right. Okay. So the lender's pretty safe there. Your investor is pretty safe on that deal, it sounds like.
Correct. I think from a principal protection perspective, right, we feel we're covered. Yeah. Ultimately, though, from a business perspective, right, we never want that to happen because it means that the individual's collateral has gone down, as well as now the loan is effectively paid off as well, right? So.
Yeah. Okay. Say you borrowed 100,000. Your collateral was worth 200. The collateral is now at 120,000. You've got a margin call. You're, like 13% below the margin call, and you can't pay it or you don't pay it. Yeah. And you just say, I'm not paying the margin call. You'll take the Ethereum or the Bitcoin now, right? And you'll now own that.
Well, it'll be sold to cover the loan balance, and whatever differential will be returned to the customer.
Oh, okay. But if it's worth $50,000, if it's below
so the margin call would happen before that, right? There wouldn't be a situation where we'd be down to 50,000, right? There'd be.
I don't know. It could happen. Those swings are pretty quick in the Bitcoin market.
You can, but we have ways of basically mitigating sort of margin in our ability to sell collateral, right? With our risk management system.
Okay, got it. But the only thing I want to make clear is if you as the lender lose money on the deal, do you come back to the person? Is it a recourse loan?
No, there's no recourse to the borrower.
So there's no recourse. So you're taking the entire risk on the collateral maintaining
Absolutely.
value. Okay,
Absolutely. Yeah. It's our ability to be able to make sure that we can monitor the collateral. And then, in situations where this is happening, right, through our platform, the customer knows that they're getting closer, right? They can post additional collateral, right? We've had clients that have gotten closer and they've posted more Bitcoin, right?
Okay. Sure. Yeah. Okay. And is there any like negative credit reporting if they default?
Nope.
Okay.
No, there's not. Okay, good. No, the recourse is to the Bitcoin, right? So for some individuals, right, that is a very big plus, right, for them to be able to borrow large sums of money relatively quickly without, a very broad type of credit underwriting.
Yeah. What I'm kind of thinking in the back of my mind, and I think a lot of people are thinking this, when I first heard about Bitcoin when it was $74, and I should have bought more, right? Okay. I loved the idea. I mean, I want to see it succeed more than anybody you can imagine, because I love the idea of a currency of the people, that's not controlled by a central bank. There's just way too much evil doing going on with central bankers and governments all around the world, right? But it just puzzles me because, you listen to every Bitcoin maximalist and they're just so high on it. And, if you listen to a couple of Michael Saylor videos, you might put your life savings into it. Right? But then,
a lot of people have.
See, here's where the money meets the road. I always say this. If the lenders won't finance it, that's the true believer. That's how much faith they have in the deal, right? And in your case, and in many other cases, nobody will finance it for more than 50%. I mean, that's where the rubber meets the road. If they think it's so great, why don't they give you 90% LTV on it like they will on a house, right?
Yeah. I mean, it really comes down to volatility, right? The mark to market, right? So if you think about it from a lender's perspective, right? If I charge 10% interest, that's all I'm going to make, right? Where if you think about from the consumer's perspective, the reason why they're doing this is they believe that the value of the Bitcoin is going to continue to appreciate. So they have all of the upside.
Yeah.
And that element of the downside, right? So in our case, right, we would say, we'd love to be able to finance at higher levels. I think you did have lenders in the past that did finance at higher levels and even under collateralized. And I think those are the individuals that unfortunately in those volatile swings lost a tremendous amount of money, right, doing it that way. So I think it really comes down to the asset class. And if you look at something synonymous to, stock lending and margin lending and, what has existed in the sort of traditional.
It's pretty much exactly like that.
It's the same thing, right? No one's going to finance 100% of it, right? They'll give you 60 cents on the dollar, 70 cents on the dollar, depending on the volatility. Right. But you're not in a position if you don't have any other line of defense, right? And recourse.
Got it. I understand it from the lender's perspective, and you always want to understand every deal from both counterparties. Right. That's definitely the thing to do. But the lender, unless they just are desperate for liquidity, they don't need to sell that Bitcoin right away. Take, for example, a bank, right? A bank takes back a property as an REO, real estate owned, right, in foreclosure. They're not like forced to sell it right away, right? You could wait till the Bitcoin goes back up.
They're not. But real estate isn't mark to market either through the loan.
Fair enough. Yeah.
Right. From our perspective, right, we're long-term believers in Bitcoin, right? We believe we're helping people be able to finance things that they want to purchase today, but ultimately keep their Bitcoin. And it's their decision when they want to sell, right? And if that means they want to pay off the loan, then that's a way of doing it. We've definitely had clients that have seen the appreciation of the Bitcoin and they turn around with some of those proceeds and pay us right back. But it's on their terms, right?
Yeah, absolutely. Okay, so we're going to move to the real estate product here, which is really your core thing in just a moment. But, we all heard that phrase so much during the Great Recession back in 2007, 2008. And the phrase was mark to market. Okay. And so is that mark to market required of you as a lender, where that's putting pressure on you as a lender that if you take those assets back, you got to sell them right away? You can't just hold them and hodl like any Bitcoin investor would, right?
Yeah. I mean, I think there is that possibility, right? It just depends sort of what your capital basis is, right? And what type of risk you want to take, right? And in our case, right, we're taking borrower risk, their ability to pay, and, we are lending at higher loan amounts than perhaps a conventional, mortgage would entail, at least, in today's day and age. So we need additional collateral for that. As a company, we do hold Bitcoin, right? We do own Bitcoin, but we're also very, very clear that the Bitcoin that we hold, that is our clients, is a liability to us, right? It is their asset.
Like
right?
a bank. Yeah, sure.
Correct.
Understood.
Right.
Because you have to give it back at the end of the loan.
Correct.
Right? But the loans are an asset to you, just like a bank.
They're
right?
an asset. Absolutely.
Yeah.
They're an asset, right? And I think that element of being able to combine, real estate collateral, which more or less what it's worth, with the combination of Bitcoin, right, creates a very interesting profile, right? Combined profile.
Okay. So the main product that you offer that we really want to talk about today is 100% financing on real estate. So what that requires, and just correct me if I'm wrong on any of this stuff, but I want to just outline it for the listeners, is take, for example, you want to buy a $1 million property. You need $1 million worth of Bitcoin or Ethereum and $1 million property. Yep. And they will both be liened, and you'll finance 100% of that deal. But you need $2 million in collateral. Normally just the property is the collateral for the lender. And they might loan you, 90% if you're owner occupied, 80% if you're non-owner occupied. So you'll get an $800,000 loan, and you'll only have $200,000 in the deal. In your example, you need to have $1 million in the deal. Fair?
Well, they have $1 million of collateral from a Bitcoin perspective, but they still continue to own it,
right?
As an asset, right?
As long as they pay the loan, yeah.
Correct. Exactly. So in a traditional deal, right, you're going to have someone that has contributed 20 or 30% down, right? So they've got that element.
Or 10%.
Or 10%.
Or 3.5% if it's FHA,
Correct.
I mean, FHA, think about it, folks. In some cities, FHA loan limits are above $1 million. FHA is not for the poor. Okay. I mean, $1 million still buys you a decent home. Okay. In most places. Yeah.
But then you also see where the greatest amount of severity is, where people are not able to pay for their mortgages, right? It tends to be in those very same mortgages, right? Right.
Yeah. Okay. Got it. So we come to this transaction with $2 million worth of collateral, $1 million property, $1 million in Bitcoin or Ethereum, and we can finance 100% without selling the crypto assets. Okay. So we get to keep that and the future appreciation, hopefully, if it happens, on that. Does that have on that $1 million of crypto? Now, this is a real estate deal now. It's not like we talked before just about strictly crypto financing. Is there a margin call element in that one as well?
There is, if it goes down. But the amount that it could go down is significantly greater, because now we also do have the real estate, which allows us to basically give them more room where that collateral could drop well over 65% from that starting value, right? So that $1 million could go all the way down to 350,000, where then we would ask them to post more collateral.
Okay, so the margin call is never on the real estate, though, it sounds like.
Correct.
It's only on the crypto.
It's only on the crypto side, correct? Because you can't,
So if the real estate goes down in value, you're not going to say
real estate. Yeah, you couldn't do a partial liquidation of real estate.
What does that mean?
So we couldn't sell a portion of the home to someone else.
Right. Okay, that's what I thought you meant. Yeah. Okay, so if the house goes, say there's a terrible real estate crash and the house goes to 700,000.
Yeah.
But the cryptocurrency is still at $1 million. No margin call,
fine.
Right?
We're still fine. No.
Okay. But if the cryptocurrency goes down by, 70%, and now it's worth 300,000 instead of $1 million.
Correct.
We've got a margin call.
Yeah. There would be a request for additional collateral, or reduce the loan balance, right? Which is an option.
Yeah. Okay. Either one. Okay. And these loans, in terms of the terms, they're similar to a Fannie Mae deal, except the rate is higher, right? They're a 30-year amortized loan.
They're 30-year, interest only. And then for the first 10 years, they're going to be interest only, and then they're going to amortize. And then after that, the rates are going to be a couple % higher than a conventional rate of 7, right? We're going to be somewhere in the 9s. So the rate's going to be a little bit higher, but well within the limits of something that is more of like a hard money loan, right? Which is going to be somewhere in the 12s and 13s.
Right. So it's cheaper than a hard money loan. It's more expensive than a Fannie Mae loan for sure. It's more expensive than a DSCR loan even. It's around 9%. And when you say it's around that rate, it's because you do some underwriting on the credit and the other assets the borrower has, right?
Correct. We're going to look at that. Obviously, we lend across a lot of states across the U.S. There's different property types, right? There's different variables that come into that more dynamic rate pricing, right? That we look at, right, as variables.
Yeah. And do you do every state?
Not every state, but roughly about 40 states we're lending.
Okay, so 10 that you don't do. And you do owner-occupied and non-owner-occupied, right?
Yeah, we do both, but we're doing predominantly non-owner occupied is where we're seeing a bigger need.
I know you said that before, before we started. That kind of surprises me, actually. It's really investors that are investing in crypto and also investing in real estate, wanting to pledge their crypto as collateral to buy more properties, right?
Yes. Yes. Yeah, they're trying to diversify their wealth, right? They don't want to sell the Bitcoin, but they're trying to diversify their holdings and be able to start building a real estate portfolio that starts to either appreciate in value or start to generate cash flow for them.
Yeah. Yeah. And one of the benefits this program offers that we should mention is that, if you sold your crypto, you'd have to pay capital gains tax. Here, you're not selling it, you're just borrowing against it, which is, really the technique that all the, wealthy people use. They don't sell their assets, they just borrow against them.
Yeah, you just leverage your assets, right? You're not getting hit with, 23, 25, or if you're in a state that has state tax, right? Even higher, right? That right away, you've got to sell a lot more.
Absolutely. Absolutely. I teach a strategy called refi till you die. And the one thing I love to illustrate in that is there's no tax on borrowed money. So the way to extract your wealth from your real estate portfolio is just borrow against it, which, by the way, you also do refinances, right?
Yep, we do a lot of refinances. So we have combined our crypto mortgage product where they can borrow more against the property than they could with a traditional cash out refinance as well. So we are starting to see some of the clients that we worked with when we started issuing these mortgages a few years ago, they're coming back and saying, well, we can now have significantly more equity. Could we borrow against it? Or we'd like to take out some of this equity and buy more Bitcoin, right, with it, because we believe the element of being able to invest in Bitcoin is going to give them a greater overall return than having it just sit in their home.
Yeah, but they have to pledge Bitcoin to buy more Bitcoin.
But they own the Bitcoin. So what they're looking for is the upside appreciation. So they're cashing out the home equity and using that home equity to buy Bitcoin and buy more Bitcoin.
Yeah. Or they could buy more properties with it, either one.
Or properties.
Right?
Or properties. Yeah.
Yeah. Yeah. Okay. Okay, good. Anything else you want people to know? Anything I haven't asked you, or anything you want to say?
Yeah, I think that, if you think about a crypto loan, it's a loan that people can use for a lot of different reasons, but it's going to require more collateral. And a crypto mortgage is going to require half the amount of the Bitcoin collateral because we have the real estate in the transaction. But Milo is financing, the million, right? The full million, and a seller ultimately wants cash, and the client continues to own the Bitcoin. So for someone that is looking to buy property and has Bitcoin, this is a fantastic way of doing it with a crypto mortgage versus doing it with straight up crypto loan where you've got only a 1-year term versus a 30-year term. You have half the amount of collateral and the rate's going to be lower. So it's a really compelling offering.
Yeah. Cool. Josip, this is great. I'm glad you told us about this and informed our listeners on it. One thing I would just want to ask you, if you care to comment on it, is just your general thoughts on the economy, the crypto market, the real estate market, whatever you want.
Yeah, and look, I think on sort of where Bitcoin is today, I think it's never been a more exciting time, right? Bitcoin was born 15 years ago, and the value of Bitcoin at the time was, $10, $50, $100, and here we are, right? I think we're at 101,000 today, which is pretty remarkable. And there's so many individuals that own Bitcoin, so it's been such a fantastic, wealth creating effect, right? What Bitcoin has done. And then now we have all these major institutions and sovereign wealth funds and, even the US government, right, buying Bitcoin. So I encourage people to hopefully hold on to their Bitcoin because it feels like there's a lot of people that want to own Bitcoin and there's not enough of it. It's a finite asset. So I think it's going to be very interesting to see how it plays out, but definitely keep your Bitcoin for as long as you can.
Yeah. The amazing thing to me about it is because it doesn't produce income, it really is just an extremely speculative asset. And it's amazing that an asset can capture so many people's attention by being really largely just a story. I mean, it's pretty incredible, and listen, I own a decent amount of it. Okay. I'm not bashing it, but I do worry that, I could wake up tomorrow and it could be zero, right? Because it has no intrinsic value. At least, commodities like the ingredients of a house, right? The copper wire, the lumber, the concrete, the petroleum products, all those ingredients of that house, those have like intrinsic value, right? That it doesn't matter what currency they're traded in, everybody needs them because everybody needs shelter, right?
Yeah.
But Bitcoin is largely just a sort of a freedom movement.
It's digital computational money, right? It's we all have the belief that it has value and has some tangible place in the world, right? If we think about, any type of currency, it's a function of the belief that it's worth something. The moment you stop believing the currency is worth something, it starts to lose its value. So I think that there is that element that there are more people that believe in Bitcoin today than they did 5 years ago and 5 years before that. So that's incredibly exciting.
No
right?
question about it.
And getting more and more diverse.
It is very exciting.
Yeah.
It is very exciting. The difference is, though, you can't, like, I don't think you can do a fair comparison to say, well, the dollar is just something people believe in, or the euro is something people believe in, or the yen. These things have the sanction of a government, and a government means they can use force to, make their will real, right? Like I love all of the gold bugs, right? They always give this argument, and it's just always struck me as ridiculous. For 25 years, I thought it was ridiculous. They'll say, well, the dollar isn't backed by anything. No, it's backed by nuclear missiles and aircraft carriers.
There's real assets, right? I mean, I guess you could also make the argument that all of us proportionally own a little tiny piece of that, but we can't really cash it in either. Right? All those assets, right? Technically, right? Because we own a little bit of the currency. I think this is one of those things where I think of Bitcoin a lot as an insurance policy on the element of there's a lot of things that are happening in the world where things are changing very, very rapidly. And sometimes we do need to believe in something that maybe isn't controlled by anyone. And, time will tell how that plays out. I'm not necessarily in the camp of saying, here, I need to sell all my dollars and buy only Bitcoin. But I do know that today, the dollars that I have, I need significantly more dollars to buy the same amount of Bitcoin that I could, right? One Bitcoin equals $101,000 today, where before it used to equal 100. So you could say my dollars devalued pretty significantly versus Bitcoin.
Right, but it was at $84,000 just not too long ago, So I mean,
so I need more dollars to buy the same amount of Bitcoin, right? So,
well, you needed less dollars, a few weeks ago.
Less dollars. Yeah, now I need more dollars at 100,000.
Yeah,
so
right,
potentially,
right. So it's like everything, it's a moving target. And look, the gold bugs have been saying since the beginning of time that gold is an insurance policy, if nothing more, because it doesn't have cash flow either. So that's interesting. Good stuff. Well, this is really interesting. Share with us, like, how long ago did you start doing these crypto real estate combo mortgages?
Yeah, so we started doing them in 22. So we originated, tens of millions of dollars. I think, the last press release we put out, we've done over 65 million. So we've done significantly more than that. And, we're excited to continue to, play around with variations of the offering, right? To be able to help more people in the construct.
Yeah. And how fast do you underwrite these mortgages? How quickly can someone close on a deal?
We've built technology where someone can come in, and depending on what they enter in their profile, they get an instant result of what they qualify for, and we can close transactions in a couple of weeks. So significantly faster than any other type of. So
faster, about twice the speed of a typical mortgage.
Oh yeah, absolutely, yeah.
Interesting. And so if each loan is $500,000, for example, then you've done about 120 of these deals so far. Well, it's more since your last press release, as you mentioned.
Correct.
Yeah.
Correct. Yeah.
Very interesting. Yeah. Well, I hope you succeed wildly with this, and it just becomes a real player in the market. So best of luck to you on that. Give out your website. Let them know where they can find out about it.
Yeah, wonderful. Yeah, thank you for that. Our website is milo.io. You can also find us on X and Twitter and on LinkedIn and other social platforms. And then if you want to send us an email, it's loans with an S at milo.io.
Josip Rupena, thanks for joining us.
Thank you for having me.